I want to share with you my stupid, simple, strategy that will help you make money trading the future markets. Okay, if you have a goal of making $10,000 a month, it's a very easy strategy. Trading supply and demand. I'm going to show you, break it down, how I go about doing this. The key to it all is trading confluence, looking for confirmation across multiple charts to give you the confluence you need to trade these type of setups. All right, very simple. It is not complex at all. And honestly, I don't even like to use the word stupidly simple, because some people may say, oh, what is he trying to say? I'm just saying it is a very easy strategy that you could trade yourself right from home if you know what you're doing. The number one thing that I want to say, you have to understand the concept of market structure. Okay, you need to make, and the reason why is because you want to make sure you're on the right side of the actual market when you're trading. Do you want to be trading going short when the market overall trending is to the upside, bullish? No. Or inverse of, if the market is bearish to the downside, do you want to be looking for opportunities or scalps to go long? No, you don't. You want to trade in the overall direction. Okay, now you have where the market may be trending to the upside, and there could be possibilities where it reverses from the upside to the downside. So then maybe your bias will shift from looking for opportunities to go long. Now you're looking for opportunities to go short. So here is what and how it breaks down. Okay, $10,000 a month is simply just making $500 on a day, because roughly there's about 4.3 weeks in a month, just depending. But let's just average it out, 4 weeks in the month. That's going to be $2,500 a week. Okay, you're probably saying, well, yeah, but I could possibly take some losses as well. Yes, we're talking about if we had a perfect world, right? I mean, of course, you probably, if you have a goal to make at least $500 a day, because that's what it equates down to be, you can do this, and that's trading like 1 to 2 contracts. You're probably saying, well, how can you do that? Well, trading 1 to 2 setups a day will put you at an area of maximum profit of about $500 gross profit a day. Okay, that's $10,000 a month. You could do this if you are taking the right type of setups and looking for, scalping opportunities off the future charts. I trade range charts. I'm trading supply and demand, but I'm using top-down analysis across multiple charts to find beautiful trades setups to get into. The best ones are where you have confluence across, like, for example, my higher time frame, I'll mark up that chart first. Then I may scale down to the 60, down to the 24 on the NASDAQ. Okay, if I'm trading, like, say, the ES futures, the E-mini S&P 500, I'll start from a 60 range chart down to maybe a 30 range chart and move down to a 12 range chart. Okay, that's allowing me to see what's going on, from top-down analysis across all the charts. But I want to trade in the direction of the higher time frame. So, as an example, I'm going to show you two from where one is taking a bullish opportunity off a key area of demand, and the other one a supply setup. Okay, if you're not familiar with the term supply and demand zones or setups surrounding the actual strategy, please spend some time watching the videos here on this channel, because all it is aggressive areas of buying and selling in the market in which the institutions, the banks, have engaged to place orders within the market. Okay, so if you see this area right here, we were bearish to the downside. This is actually a reversal here at the bottom where the market made a low at. We got a high, higher low, and then break structure above multiple points above here and right here, leaving this beautiful area of demand. See this aggressive buying? We have multiple green candles to the upside. Where does it pull back to? A key area of demand, high probability. What makes it high probability? Let's stop right now. Ask this question. This is a freebie for you right there, for all those that have been, for the first time viewers out there. What makes this a valid high probability zone is where we have a imbalance or gap on this candle right here, back down to our box, our zone off the 120 range. Okay, this demand zone here. In between this, the top end of this zone here, and this is the next candle, is the bullish candle that broke above that last down bearish candle. Then we have this third candle here. The wick of it only came back this far, so it left a gap or imbalance in between. Okay, that makes it high probability. That imbalance has to be filled. Okay, so where we have it resting back at a zone, that makes it high probability. And because we have a structural shift from the bottom here, where we have a reversal back to the upside, we are bullish. Look for a pullback to this key area of demand. Mark it up, whatever rectangle color you want to mark it up or square you want to mark it up with, Do that first on your higher time frame. Then you can simply go down to even like a lower time frame chart like the 60 range. But my entry chart is my 24 range, not my 12 range. My 24 range on that. So when I move down to my 60 range, okay, what do I have also here? I have a high probability, the red box there, the red rectangle box, 60 range demand zone, okay? So now I have confluence with the 120 higher time frame. We're bullish to the upside. We're also bullish on the 60 range. I have a high probability zone of demand on the 60 range. Now I'm just going to scale down to my last chart, which is my entry chart, to see how I can get to a trade. So, because right now I already have enough confluence to actually get into a trade. So let's go down even lower to the 24 range. All right, so here we are. First tap, 120 demand. Second tap, 60 range. Just scaling down. Now I'm basically looking for at this point here to see if there is a 24 range demand zone to give me an opportunity to scalp going long. But there's not. I need to see one that's high probability that's on the inside of the 120, maybe and the 60, and to see if there's one on the inside. Sometimes you won't have where you have a 120, a 60, and a 24. As long as you have a 120 range demand zone, a chart that you're marking up with, off of your higher time frame chart first, then moving down to maybe your entry chart, like a 24 range chart for me, I'm trading this on my NASDAQ. So if I have first box, 120, higher time frame, markup. Then I'll move down to my 24 to see if I have a 24 range demand zone. Then that's going to allow me to get into the trade. But in this case here, because we don't have a high probability 24 range zone, I'll just wait for the market to start to show its hand to where it's moving back bullish to the upside. High, higher, low, breaking structure above here and here. Now I got a structural shift on my 24 range. Pull back, key area of demand, go long. Okay? Everything comes together. The 120 demand zone, high probability. The 60 range demand zone, high probability. Breaking structure, back to the upside, in the direction of the higher time frame chart, pull back to a key area of high probability demand at that point on the 24 range entry chart, go long. Okay? Simply put, there's not a lot of thought that you need to put into it, but again, the key is to understanding and mastering market structure. Now, I did a great market structure video for anyone that is interested in watching it and grasping some information, taking notes. You may want to think about becoming an ultra elite member. Okay, it's a private community where I post tons of valuable content surrounding my trade breakdowns. The trades that I post over on the Discord, there's trade breakdowns that I'll basically walk you through setup after setup, talking about structure, talking about the setups and why I took the trades. Also, you can get the live recorded trading sessions, okay, the market recap videos, the video playlist, and again, the great video that I cover on market structure. The link is down in the description portion of the video. It's only pennies on the dollar a day. It's like 49 to 50 cents a day. Basically, it's $14.99 a month. You're getting all that. Just imagine, signing up for that. You probably could have a turnkey system to where you can become profitable and start to show, or at least to start to show you have some consistency in your trading within 30 days, all for just $14.99 a month, okay? I can't guarantee anything to anyone, but this is how I personally trade, because the style and the ways that you may have learned, sometimes you have to undo bad habits to learn new things that actually work, okay? We have profitable traders that are part of our Discord community that have learned the same style of trading, that have switched from time-based charts over to range-based charts, because they just, like me, are able to see it clear when it comes to volume and price action just as well. Profitable traders who have learned the strategy, who are making money and who are consistently profitable as well. But again, I can't guarantee anything because your perspective or outlook of how you look at the market may be different than mine. But maybe you want to give it a try. Again, it's only $14.99. The link is down in the description portion of the video, and there's so much video content there that where I walk you through, like I said, trade setups where you can watch me trade on the live recorded trading sessions where I record my sessions, and I'm talking about what I'm looking at, why I'm looking at, the trades I take. You see me take them, and I'm walking you through the trade setups themselves. Again, the link is down in the description portion of the video. If you click on it, it's titled Ultra Elite Supporter. Link there. If you click on that, 3 tiers will pop up. Make sure to choose the third one if you're interested in receiving all the perks and rewards like I just mentioned for $14.99. Now, let's go down to, or move over to the supply setup that I want to show you right quick. Where is it at? Right here, okay? I want to show you another type of setup, okay? It's basically trading supply and demand, but it's supply, aggressive selling. So we were bullish to the upside here. We dipped back. We broke structure above these highs here. But then we got a reversal from the tops right here to where the market on the higher time frame shifted from bullish back to bearish. low, lower, high, low, lower, high, breaking structure. As long as we're breaking structure lower, you should be looking for key pullbacks to areas of supply to trade from going short. The market broke structure right here and immediately pulled back to this key area of supply where the market broke structure right here. Okay, so we low, lower, high, broke structure on the movement to the downside. Okay, so now we have a valid supply zone where there's a gap resting back at it, what makes a high probability or imbalance resting back at it. Mark it up on your higher time frame chart first. That's why I have it marked in that blue box. Then I can move down to my 60 range and see if I have one step lower a supply zone, beautiful supply zone right here. Low, lower, high, broke structure, aggressive selling on both the 120 and the 60 range. It pulls back to the 60 range demand zone. Now, at this point here, you can scalp off the 60 if you have the capital and you're able to kind of weather the storm on pullbacks. But this is you had the confirmation there, you had the confluence there, or you can scale down even lower to the 24 range and look to see if there is a zone that you can mark up on the inside of the 120, 60, see if there's a supply zone on the 24 range. Now, here we pull back to the 120, the 60, okay? But the market didn't pull back or there's not a 24 range supply zone resting back here. So you can wait for the market to start to break some structure lower and look for a pullback to a key area of supply to go, to go short. In this case here, the market didn't really, when it pulled back here, we don't have a low, lower, high breaking structure and pulling back here. So this would be an opportunity just to take a trade from the 120 and the 60. I would take off the 60 range if you know what you're doing to trade. I would go in here at 21,370 and a half to go short. Okay. Again, you got two levels of confirmation there or confluence from two different charts. Just there's not one on the 24 range. Sometimes that happens, and you can just not take the trade, or you could take the trade if you want to take out the 60 range. Again, taking it from a slightly higher time frame, there could be a little bit more. The market could pull back some, meaning it could tap the 60 range, pull down, drop down, and then pull back some before wanting to move. But in this case here, it tapped the 60 and then immediately dropped to the downside. Okay, so again, everything's about first and foremost having the confluence and to give you the confirmation to take the trade. Here we have enough confluence because the market tapped into the 120, tapped into the 60, and then it rejected off the 60 to go short. Okay, so people always ask where to place the stop loss. Well, once the market taps the final zone that you're looking to go short from, the stop loss is going to go at the back end when the market rejects that last zone. Okay, so let's say we're taking a trade here off the 60 around about or it taps into the zone here around about 21,385 or 384. I would enter the trade here at 380, the first bearish candle break to the downside, and my stop would go on the back end here at 386, a few points above that because they love to push down and come back. Okay, so maybe give yourself 2 or 3 points above the rejection area there to where to get into the trade at. But this is a very simple strategy that you can use to get into a trade. And you can aim for profit areas like below once the rejection took place to fill these gaps coming back down to this small area of demand. So basically, when you get the rejection, look to see if you can take the trade going back down to fill or take out even a low, or at least fill some of the gaps or imbalances resting back below as the market starts to push lower. In this case here, because you're taking a trade from a supply area going short. If it was demand, then you'd be looking to fill some areas or gaps or imbalances back to the upside. So that's how I do it each and every day, guys. I mean, it's pretty simple. It's not complex at all. Again, depending on how many contracts you're trading. So, I mean, if you just do the math yourself, okay, let's say we're looking to pick up 20 points. On 20 points, that's times 4 ticks in every point, right? That's going to be 80 ticks. Times $5 a tick value. One contract's going to put you at $400. Okay, one contract. So maybe you're taking 2 trades, and let's say you pick up 20 points on each run. Then that's $800 on trading one contract each time. Or you could just go for, if you're trading E-mini futures, you could go for say 20 points times 4 ticks times 5, and then times 2 contracts, and that's going to give you $800. So that's how you can definitely make way more than $10,000 a month in gross if you are trading and trying to pick up 20 points at a time. Whether trading one contract or 2 contracts, just depending, okay? And let's say maybe you are trading just one contract and you end up picking up 22, 23, 24 points, whatever the case is, then be done, because that's going to give you that should give you, let's say 22 points times 4 times 5 That's going to, well, that's 440. So maybe about 25 points then, I believe. Times 4, times 5. Yeah, $500 on that right there. So 25 points is going to put you at on the NASDAQ, which is fairly easy to get. Whether you're doing one trade setup or two, that's going to give you that $500 mark each day. Adding up to be consistently each day to day, that's going to be $2,500 a week. It's not hard to do. Trust me when I say that, okay? But that's for all of my beginners out there, that's looking for a profitable trading strategy, something that's simple that can allow you to make some money. Just scalping the future markets. It's not that hard, okay? I prefer personally to trade the indices. I like trading the NASDAQ, the ES. I even like trading gold just as well. But you have to, decide which markets you want to actually trade. But again, this is a beginner style strategy that can make you some money if you understand it. I would spend time watching the video content. People always ask where to start from. Start from this video right here and just work your way going backwards. But I would, definitely recommend if you are someone that can or wants to or can afford it, whatever the case is. If you want more of a, not say jump start, but just more information that will aid you surrounding the strategy, and where I go into more detail about the actual strategy, specifically into the trade setups and the live recorded trading sessions, all right, and the trade breakdowns. That information there, you may want to think about becoming an ultra elite member. Again, the link is down in the description. Now, you can join the Discord. It's free. The link is down below. It's just as well. It's free to join the Discord. But for all those that want to become part of that private community and get all that additional valuable content, the link is down below. But outside of that, guys, that's all I have today. I appreciate everyone for supporting the channel and watching the video content. It's helped so many people tremendously. So many people have reached out to me, and this is the purpose and reason why I continue making this content, because I want to see people become successful. But yeah, that's all I have. I appreciate it. If you guys do me the biggest thing is kind of engage with the in the comment section. Let me know your thoughts about certain things, what markets you're trading, what time frames you're actually trading. Maybe where you're at globally. Do you trade during the London, the Asian, or the New York session? Just leave a comment down below, or maybe you're even using some different style of strategy. You can comment on that below if you want to as well. But anyways, if you found value in today's video, please make sure to drop a like or a thumbs up. And if you're not a current subscriber, please take the time to go ahead and click that sub button down below. Make sure to turn your post notifications so you don't miss any of the uploaded content that I pretty much drop on a daily basis. Lots and lots of gems here. I greatly appreciate it. But outside of that, that's all I have. I'll see everyone in the next video.